Hi, and welcome back. Today we're going to talk about how to minimize your tax bill. Taxes are an integral part of our lives, and understanding how to plan for them can help us minimize our tax obligations. In this video, we will be discussing some basic tax-related topics and ideas that will help you understand the basics of this important topic. We will also be providing you with specific helpful information that will enable you to minimize your taxes efficiently to help you save and invest more to increase your wealth. But before we get started, please remember to click and subscribe and like this video. It really helps our channel to grow to help others who are looking for ways to grow their wealth. Now, let's dig into our topic today. The federal tax system is a constantly changing complex web of laws, regulations, and procedures that can be difficult to navigate. However, understanding the basics of federal tax planning is critical to minimizing your tax obligations. The first thing you need to understand is that the federal tax system is a progressive tax system. This means that the more you earn, the more you pay in taxes. The tax rates increase as your income increases, and you can find the federal tax brackets on the IRS website. However, the more money you make, the more opportunities you will find to offset your earnings with tax deductions. Deductions and tax credits can help reduce your taxable income. A tax deduction is an expense that can be subtracted from your taxable income. For instance, if you donate money to a charity, that donation is tax deductible. Credits, on the other hand, directly reduce the amount of tax you owe. For instance, if you have a child, you may be eligible for a child tax credit. There are many tax deductions and credits available, and you can find them on the IRS website. It is crucial to keep track of your expenses and maintain proper documentation to ensure you claim all the deductions and credits you are entitled to. If you are really serious about building your wealth, you will also want to start using a good CPA immediately. This will help you to proactively plan your earnings and deductions in advance. You should also start contributing to a tax-deferred retirement plan, such as a 401k or IRA. Contributions to these plans are tax-deductible, and the money grows tax-free until you withdraw it in retirement. By contributing to these plans, you can reduce your taxable income and save for retirement at the same time. You may also find that investing in a Roth IRA may also be an important part of your wealth-building strategy. Even though your investments into a Roth are invested with after-tax dollars, when it's time to start withdrawing money from your Roth account, your withdrawals are available to you completely tax-free during your retirement years. It is essential to understand that tax planning is an ongoing process. You should regularly review your tax situation and make adjustments as necessary. For instance, if you get a raise, you may need to adjust your withholding to ensure you do not owe taxes at the end of the year. This also applies to earnings from your own business. In addition to federal taxes, you may also need to pay state taxes. State tax laws vary by state, so it is essential to understand the tax laws in your state. Your CPA can assist you in understanding your state tax obligations and planning. Most states have a state income tax, which is similar to federal income tax. The tax rates vary by state, and you can find the state tax brackets on the state's Department of Revenue website. Some states also have sales tax, property tax, and other taxes that you may need to pay. It is crucial to understand the tax laws in your state and keep track of your expenses to ensure that you claim all the deductions and credits to which you are entitled. One way to reduce your state tax obligations is to take advantage of state tax credits. Many states offer tax credits for things like installing energy-efficient appliances or solar panels on your home. You can find information about state tax credits on your state's Department of Revenue website and, of course, through your CPA. It is also essential to understand that some states have tax reciprocity agreements. These agreements allow people who work in one state but live in another to pay taxes in their state of residence rather than the state where they work. This can be beneficial if the state where you live has a lower tax rate than the state where you work. If you are a small business owner, tax planning is even more critical. There are many tax deductions and credits available for small and large businesses, and taking advantage of them can help reduce your tax obligations. The first step in tax planning for small business owners is to keep accurate records. This includes tracking all business-related expenses, keeping receipts, and maintaining a separate business bank account. Always remember to keep your personal accounting completely separate from your business accounting. By keeping accurate records, you can ensure that you claim all the deductions you are entitled to and avoid any issues with the IRS. It is also important for small business owners to understand their estimated tax obligations. If you are self-employed, you may need to make quarterly estimated tax payments to the IRS. Failing to make these payments can result in expensive penalties and interest. Finally, as we mentioned earlier, it is important to work with a qualified tax professional who can help you navigate the complex tax laws and ensure that you are taking advantage of all the tax deductions and credits available to you. Understanding federal and state tax planning is essential to minimizing your tax obligations. By understanding the basics of tax planning, keeping accurate records, and taking advantage of tax deductions and credits, you can reduce your tax burden and keep and invest more of your hard-earned money. Minimizing your federal tax obligations can bring you a host of benefits and advantages. While no one enjoys paying taxes, understanding how to minimize your tax bill can help you keep more of your hard-earned money and achieve your financial goals. Here are some of the biggest benefits and advantages of minimizing your federal tax obligations. Minimizing your tax obligations means that you get to keep more of your money. By reducing your tax bill, you can free up funds to use toward your financial goals, such as saving for retirement, paying off debt, or investing in your business. Paying taxes can be a significant source of financial stress for many people. By minimizing your tax obligations, you can reduce this stress and achieve greater financial stability. This can improve your overall quality of life and help you feel more in control of your finances. By minimizing your tax obligations, you can increase your cash flow. This can be especially beneficial for small business owners, who may need to reinvest their profits back into their businesses. By reducing their tax bill, they can retain more cash and invest it in growing their business. Minimizing your tax obligations also means taking advantage of all the tax deductions and credits available to you. This can include deductions for things like charitable donations, medical expenses, and business expenses. By claiming these deductions, you can lower your taxable income and reduce your overall tax bill. Minimizing your tax obligations can also help you plan for the future. By reducing your tax bill, you can free up funds to invest in your retirement savings and investments, such as a 401k or IRA. This can help you achieve your retirement goals and provide for your future financial needs. By minimizing your tax obligations, you can ensure that you are in compliance with federal tax laws. This can help you avoid any potential penalties or fines for failing to pay your taxes on time or accurately. It can also help you maintain a positive relationship with the IRS, which can be beneficial if you ever need to resolve any tax-related issues. Minimizing your tax obligations can also improve your overall financial standing. By reducing your tax bill, you can increase your net worth, improve your credit score, and achieve greater financial stability. This can help you achieve your financial goals and build a strong financial foundation for the future. Minimizing your federal tax obligations can bring a host of benefits and advantages. By reducing your tax bill, you can keep more of your hard-earned money, reduce financial stress, increase cash flow, take advantage of tax deductions and credits, plan for the future, stay in compliance with tax laws, and improve your financial standing. While navigating the tax code can be complex and overwhelming, working with a qualified tax professional can help you maximize your tax savings and achieve your financial goals. Remember, tax planning is an ongoing process, and it is essential to review your tax situation regularly and make adjustments as necessary. Whether you are an individual taxpayer or a small business owner, working with a qualified tax professional or CPA can help ensure that you are taking advantage of all the tax benefits available to you. Thank you for watching our video on federal and state tax planning, and we hope you found it helpful. As always, please remember to click and subscribe and like this video, and let us know in the comments below about what topics you would like us to cover in future videos. We would also love it if you would share this with your friends. They will thank you too.